Hello and welcome to this week's Gold and Silver Club end of week review for the 31st of January 2014, presented by myself, Phil Carr, and Nick Housey at the Gold and Silver Club. Today, we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. We'll be looking at an end of week summary for gold, silver, oil, natural gas, and the commodity currencies. We'll look at the top trades of the week. We'll cover live market commentary and technical analysis. We'll also look at key events for the week ahead and, of course, answer any questions you may have too. This week has been another very lucrative week on the commodities markets. We've had the FOMC announcement this week, and we'll talk you through exactly what happened. So the US Federal Reserve continues to taper. So on Wednesday, the 29th of January, the US Federal Reserve announced it will continue to reduce the pace of its monthly asset purchasing program known as quantitative easing. Growth in economic activity picked up in recent quarters, the Fed said in a statement. Household spending and business fixed investment advanced more quickly in recent months, and overall the policymakers project economic activity will expand at a moderate pace. So Wednesday's move comes 6 weeks after the FOMC first decided to reduce the size of its asset purchasing program in December, and the Fed is expected to reduce monthly asset purchasing by 10 billion every month from now until it ceases the program entirely at the end of 2014. So following the news on Thursday, gold prices, they dived 2.5% to a daily low of $1,237 an ounce. We'll talk through you step by step what happened. On Wednesday's peak was at $12.70 earlier on that day, providing commodities traders with a very lucrative sell-short opportunity. So there's been some very big shorting positions over the course of this week, whilst the US dollar index has continued to gain 0.69% to trade at 81.064 points. So we'll take a look at that very shortly as well. So looking ahead, the big question now will be, as China prepares to take a week's break to celebrate the Lunar New Year holiday, will this create further weakness for gold and silver prices as they are not there to support the market overnight? So before we go into the technicals and we look at the top trades of the week, and we will review the this week's FOMC statement and what that means for the price moving forward of commodities, we are just going to quickly, for those of you who are new to the weekly Gold and Silver Club summary, we'll just go through some background on the Gold and Silver Club. I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, and the commodity currencies. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars, and workshops. Joining me in running the Gold and Silver Club is Nick Housey, professional trader, investment analyst, and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset, tools that give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications, and we've appeared frequently on financial television. So that's some background for you on the Gold and Silver Club. So we'll take a look over at gold price at the moment. So gold price trading very near the weekly lows, $1,245 an ounce, looking very interesting technically at the moment. So we'll take a look at that. Not much movement overnight with the bank holiday in China. So there's lots of scope for some interesting moves today on gold. So we'll take a look at that very shortly. Before we do so, we'll go over our top trades of the week. So top trades of the week using the Gold Silver Club signature trading strategies. So first of all, in the earlier part of the week on the Sunday open, gold did manage to have a spike high, and we spiked out to $1,200 $178 an ounce on the Sunday open. So we closed very strong on Friday. And we've just seen the January effect, which we've discussed in prior webinars. We've seen that really follow through throughout the whole of January. In fact, since the low that we put in on the 31st of December of 1182, we've rallied over 900 points on gold during the month of January due to the January effect. So we've had a very strong rally. That did come to a head. We came to a whole cluster of key resistance levels at that 1278 level, Fibonacci levels as well. We saw a nice opportunity to sell short on the Monday from a setup right at those resistance levels. 1269 was the entry there. Came out at the next key Fibonacci level, 1250, profit of 190 points, 65-point risk on the trade, so $650 risk for each lot traded, and 190 points profit, so 1,900 US dollars profit for each lot traded for a 3-to-1 risk to reward. So that was the first gold trade of the week. Then this week we've had some nice opportunities to trade WTI oil, and that has seasonality as a bias on that at the moment for the bullish momentum typically as we come to this time of year. We've had some good opportunities on pullbacks to get in this week. We had a nice breakout earlier on this week, which was at 95.97 as shown on the chart, and produced a nice 3-to-1 exiting at 97.18 for a risk of 38 points, $380 risk for 129 points profit for 1,290 US dollars profit for a 3-to-1 on WTI oil breakout this week. We shorted, this is actually this, the next slide I will show you is going to be Australian US dollar. This is on the FOMC. This is not the FOMC one, but this is a trade setup which we took earlier on in the week prior to the FOMC. This was an entry at 0.8793. As you can see, they're just at the top, right below resistance level. Look at the weekly and monthlies on Australian US dollar. Even this morning, we're breaking down again. We're near 3-year lows. The weekly chart is very bearish. The monthly chart is very bearish. So any rallies have been sold back into take advantage of this overall weakness. So we had a 25 pip risk on that, $250 risk for a reward of 51 pips, so 510 US dollars profit for a 2-to-1 there, just earlier on in the week on Australian US dollar. So FOMC gold. So this was a lovely trade that we took live with our gold and silver club traders. We had the news which came out of tapering on Wednesday. We saw initially a muted response. However, technically speaking, we did break a key level. And fundamentally speaking, in terms of the news, the additional tapering, we expected the US dollar index to rally and gold to sell off. So both technically and fundamentally, and seasonality-wise, as we come into February and China is off, it was looking weak. But you had to hold your guns on this short position because we were closing right at the highs on Wednesday. We closed very near the monthly highs, the weekly highs, and the daily highs. However, the right trade, as you will see for those of you who will be watching our recording of how we traded the FOMC, we stuck to our short position and we came in at 1264. We closed one of our positions short yesterday at 1241 for 230 points profit for a risk of 60 points on the trade, $600 risk for 230 points profit for $2,300 profit for a nice 4-to-1 there on FOMC gold. And we'll take a look at the gold chart very shortly to show you what we expect as we go into next week. And finally, we had a nice breakout on natural gas during the Federal Reserve announcement that triggered earlier on in the day. Nice trade setup. So the risk on that was 25 points, $250 risk for a profit of 49 points, $490 profit for a nice 2-to-1. Entry at 4.96, exit at 5.45. So we had a lovely breakout on natural gas. And also WTI oil was another trade opportunity yesterday, as well as we had another breakout of consolidation, broke above a key resistance level, entered at 97.70, just came out there at a 2-to-1, 98.47, and the profit on that, sorry, I should say profit, 77 points profit there. The risk was 41 points, so $770 profit for $410 risk for a 2-to-1 on WTI oil. So as you can see, this week has been very lucrative for the commodities. All in all, tallied up. Our top trade there made over 691 points this week. So we've had a very strong week on the commodities, and the fundamentals have really, from the FOMC, have helped us to just enter into some really strong short positions after FOMC as well. So let's take a look at the live charts now. So we'll take a look at, first of all, we will start with the US dollar index. So bear with me as I bring this up for you. Okay, good. So first of all, we have the US dollar index here. So you can see actually on the Federal Reserve announcement, the price of the US dollar, well, where the US dollar index was hovering about was here. And this is where we closed, in fact, on the Federal Reserve announcement. So we saw gold close near the daily highs, but fundamentally speaking, additional tapering should cause the US dollar index to rally. There was definitely a muted response here as we then saw this a bit of a delay reaction, and then the following day is the move we wanted, this huge surge on the US dollar index, which we would expect from additional tapering. And we've come all the way up to a key fib level actually today at 81.11, which has caused a nice move down in gold, Australian US dollar, silver, copper. So this is the move that we wanted, that we expected. You just have to be patient with it and allow the trade to work itself out. So that's the US dollar index, how it's looking at the moment. So it's definitely going to be putting pressure on the precious metals over the period, over the course of today and possibly into next week as well. So copper at the moment, we've had some nice opportunities again here on copper to take advantage of these sell short since the FOMC on copper. We broke down below key 200-day moving average on the FOMC, the day before the FOMC. We came down, we broke through 3.247 Fibonacci, came down, broke through 3.2273, and our target, short-term target, is 3.1983. But if the market can break through that, then we'll be looking to target even lower here at 3.1190. Now, copper and silver are very strongly correlated, so normally weakness in copper does follow through to silver, both being industrial metals. We can see we're in an overall downtrend here on copper. We have been really since the end of December, and we can see that there's definitely going to be, looks like, further weakness at the moment for copper. So technically speaking, copper looks like it's on its way to 3.1983. We'll see how the market reacts to that fib level, and if we can break it, then we'll continue our short down to 3.1190. Moving over to silver. So silver's not had a good time of it recently. Silver not faring as well as gold. Gold, if you look at the FOMC announcement, was still pretty much near weekly, monthly highs. It was still holding its ground on Wednesday evening. You needed to be really careful, though. We saw a lot of market analysis about buying this breakout on gold, and that gold was going to rocket, and a lot of talk about the safe haven buy, but you really wanted to be careful. It wasn't the trade to go long gold after the FOMC announcement. You really wanted a short. So if you have a look at silver here, we are in a massive downtrend still on silver. If we go out further out on the chart, we've maintained this downward trending trend channel really since August last year. We can't break through it. We tested it a few times. We're now below all key moving averages on silver. Silver's looking pretty bearish. Yep, found a little bit of support this morning around this fib, 19048 fib. Now you want to watch out here because silver's not far away at all from breaking down its 3-year low of 1861. So we're only about 50 to 60 points away from taking this low out. And if we take that out, we could start to see a lot of stop losses get hit, and we could see a nice move lower. The other thing we'd watch out for here is obviously a potential capitulation, which is where the market would come down and we suddenly see what we saw at the end of December, a massive dragonfly doji form, something like this, and we would then see the market just rally again if it can find support at this key level again at 1861. But if it can't, we'll probably we'll wipe out a load of stop losses on the markets from institutions, funds and so on, and we'll should see a nice fall lower. There's not really much support until around the 16 level on silver if it does take out that low. If we go across to gold, so we look at the gold chart, so gold overnight really very muted. There wasn't much buying, wasn't much selling either. We just came down, we retested yesterday's low again. So really, in terms of weakness here on gold, in terms of sell short opportunities, we really need to take out the weekly lows here. So if you go onto the weekly chart, you'll see last week's lows, the past couple of weeks here. We really need to take out about the 1230 level to start building up momentum to the downside and start hitting more stop losses as well. We're still being supported just above the 50-day moving average. The level where we are today, we've got a bit of a hammer forming. We've got some consolidation here. You can see we're consolidating since last night here. So we've got two levels here, which I'll be looking at to see which way we're going to break today. So we're either going to stay within this range. Let me just take a screenshot for you. I would say today, this is what I would expect to happen. Either we're going to continue and stay within this range. We're going to see a muted move today, just consolidate. Or we are going to see, we need to clear above 1246 here for a little bit of a rally, possibly back up to 1250 or even up to this downward trending trend channel. But a possible rally back up to 1250. We can just poke our heads above 1246. If you're selling short this market, you probably would have moved your stop just to above about 1247 or so. So logically, if we market rallies up to 1246, it will probably just hit some trader stops that have moved down to lock in profits here. So we could see just a bit of a poke up to 1250. If we break below 1238, I'll be looking potentially for a move down to 1230. So we get a move down to the 1230 level. Then if we can take out 1230, that's the last two weekly lows, and then we'll probably start getting down to the 1200s, and then we'll be obviously looking very keenly into next week at 1180 and seeing if we can take out 1180 over the month of February. Moving across the Australian US dollar, we're still short the Australian US dollar. Came up and retraced yesterday, so this has been really, if you take a look at the weekly time frames for Australian US dollar, I mean, it's looking terrible on the weekly. Great for selling short, but we're getting another inverse hammer on the weekly. Last week we got an inverse hammer. We can just break below 0.86589. We'll see the momentum pick up to the downside. That might happen next week. Australian US dollar very strongly correlated to gold. Both have suffered over the Federal Reserve announcement, so we've kept our short positions on. If you look at the weekly and monthly, both bearish. The daily, we produced two inverse hammers during the week. We did get some supported bounce on the market yesterday, but it has come up to the weekly resistance level just above 0.881. Found resistance there again, and then obviously short sellers have just sold into the overall weakness here. We've continued to stay short, and the market, you can see there were some opportunities if you were trading the Asia Pacific market last night actually to get in once it again came up to this level of resistance, 0.88216, and then it's just reversed overnight. And we're looking to take out, we'd like to take out 0.8708 for the sell shorts, and then we'd like to also take out last week's low here, just below 0.868. So it's looking bearish at the moment. So we'll definitely be keeping an eye on the Australian US dollar over the course of today to see if we can just continue to break down. So it's even moving quite nicely right now, actually. Let's just have a look at that. So yeah, it's just coming down to this Fibonacci level, 0.872. So that's moved tremendously actually overnight. So Australian US dollar is still in play for us for our sell short. WTI at the moment, let's just clear this up a little bit for you. Got quite a lot going on here. We've had a lot of nice breakouts on WTI. If you look at the weekly time frame, we had a nice, on the weeklies looking really, the momentum is still very much to the upside. We're finishing here, looks like a hammer stroke dragonfly doji on the weekly. In terms of the bullish momentum here, we're just taking mostly daily and 4-hour setups here, and we're looking for a move back up to the 200-day moving average, which takes us up to around the 99 level here on WTI. You can see, just draw a very simple trend line here. The market is trending upwards, and we're just continuing to break out to the upside. So we're continuing to just trade the breakouts. Brent here. Brent had a little bit of a pullback today. A little bit actually. We still got this upward trending trend channel which is remaining in place. There might be opportunities to buy the dip here. We really need to break above 108.43 here to some major fib level of resistance and get a move back up to the 109 level. So there's more scope here for some potential. Especially if we come back and retest this trend line and 106.89 today, we might get a nice opportunity to buy Brent again. Again, it's looking quite strong. based on the weekly and the monthly charts and the major trend line on the weekly. So Brent, seasonality-wise, February does tend to be a bullish month for the oil. So we are looking at potential buy opportunities here on both Brent and WTI. And last of all, we'll look at over to natural gas. So we had a nice breakout this week on natural gas over the Federal Reserve. It is pulling back a little bit today. We can see we're just going back to its weekly support around 4.81. So if we just take a look at the weekly here, so we're still very much in an uptrend on natural gas pullback. This is a bit bearish here on the weekly. We want to see how this candle closes today. We did get a nice spike and a breakout above Fibonacci level on the Federal Reserve announcement. Just move this up ever so slightly. And where the price is at the moment, we're just seeing if we're going to get any supportive bounces here. We're starting to get underneath a few key moving averages actually on the daily here. We need to see how this closes. So we could be due a little bit of a further pullback. Natural gas storage inventories have a big effect on natural gas here as well. We've made a lot during this overall upward trend and the breakouts that we've had on natural gas. There's not really a clear setup on this at the moment. So our view at the moment would be our major picks for today are definitely going to be keeping an eye on the copper market, which is continuing to break down at the moment. As you can see, it's just coming down to the next profit target. Australian US dollar continuing to sell off. We'll be definitely keeping an eye on breakout for the potential opportunities here on Brent and WTI. Silver as well. Definitely, of course, keep an eye on gold, see how it closes today. So let's move you across and let's have a look at what major news that we have moving into next week. Wednesday at 1:15 p.m. GMT, 8:15 a.m. Eastern Time, we have the US ADP non-farm employment change. That report is a measure of the monthly change in non-farm private employment based on payroll data of approximately 400,000 businesses in the US. The release 2 days ahead of government data. The change in the indicator can be very volatile. So higher than expected readings should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. So do note that the US dollar index, as you've seen on the Federal Reserve announcement, it does move inversely to gold and silver. So this is why US news announcements are important for your commodities trading. Next Wednesday, we have US crude oil inventories at 3:30 p.m. GMT, 10:30 a.m. Eastern Time. So that's very important. If you trade crude oil, we often have some nice opportunities on that announcement. That data reports the number of barrels of crude oil commercial firms have in inventories. Commercial firms report their inventory levels to the Energy Information Administration on a weekly basis. So a higher than expected reading should be taken as bearish for crude oil, while a lower than expected reading should be taken as bullish. Then next Thursday, 6th of February, 1:30 p.m. GMT, 8:30 a.m. Eastern Time, we have US trade balance. This report measures the difference in value between imported and exported goods and services over the reported period. So a positive number indicates more goods and services were exported than imported, and a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then, of course, next Thursday, we have Thursday, 6th of February, we have the US natural gas storage. So the Energy Information Administration, the EIA natural gas storage report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So that's the 3:30 p.m. GMT, 10:30 a.m. Eastern Time. So while this is a US indicator, it does tend to have a greater impact on the CAD due to Canada's sizable energy sector. It's important because the CAD is correlated also to oil price. And finally, the big one on Friday, we have US non-farm payroll. That measures the change in the number of people employed during the previous month, excluding the farming industry. That's the 1:30 p.m. GMT, 8:30 a.m. Eastern Time. So, of course, non-farm payroll measures the change in the number of people employed during the previous month, excluding the farming industry. So job creation is the foremost indicator of consumer spending, counts for the majority of economic activity. I'm sure everybody is aware that this is a major high-impact news announcement. Higher than expected readings should be taken as bullish for the US dollar. A lower than expected reading should be taken as bearish. And we will be doing we'll be on a webinar with yourselves prior to that non-farm payroll announcement. We'll be taking a look at the markets before that major news comes out. And of course, if you would like to find out more about our live trading room program, how to trade, also major news announcements like the FOMC non-farm payroll announcements live with the Gold and Silver Club, you can find out more about that. Just request information at the Gold and Silver Club live trading room at www.jointhegoldandsilverclub.com. You can alternatively just email us at the office at thegoldandsilverclub.com, or telephone us on London number 0207 193 0403, on New York number +1 646 808 0403, or Johannesburg number +27 11 083 8403. And you can join our exclusive community of international traders and really take your trading to the next level. So to find out more about that, do get in touch. And of course, subscribe to our newsletter to get the free weekly gold, silver, oil, commodity, currency news, live market analysis, and prices. And finally, everyone, before we wrap up, we would just like to wish you, on behalf of the Gold and Silver Club, a happy Chinese New Year. So happy Chinese New Year to all of our Chinese friends. And with that, that's a wrap for today, guys. So good luck for the rest of today's trading, and we'll see you on the next one. So take care, guys. Bye-bye.